And workplace messaging company Slack reporting its first set of quarterly results since going public in June. The company beat Wall Street expectations, but it also forecast a larger than expected loss for the current quarter. That putting some pressure on the stock this morning, down about 12%. Joining us right now is Slack CEO Stewart Butterfield. First interview after now being an official publicly traded company, your first quarter out. What are investors getting or not getting about what's happened here?
Well, I mean, investors are going to make decisions over the long run. This is a very strong quarter. But whether it's up or down, yesterday up 8%, and the regular market down after, it's not going to make a whole bunch of difference to the long-term holders or to the business. This was a strong quarter, 145 million revenue versus 92 million the year prior. And we're happy with that.
Let me ask you a question about this. This is MKM Partners, the analyst there, wrote a note, said, as a private company, you can grow at all costs. As a public company, you have to grow at reasonable costs.
Yes.
How do you define reasonable costs?
Well, we're in a strong cash position. It's close to $800 million in the balance sheet. And full year, we're looking at minus 100 to minus 110 million in free cash flow. So that seems prudent and responsible. One of the reasons we did the direct listing in the first place is because the strong cash position. So when we see opportunities, growth is the priority. I don't mean growth at all costs, but growth
in terms of the priority of monetizing certain customers. I think that's another issue that analysts and investors have been looking at, which is a lot of small businesses get your service effectively for free. It's really the larger enterprises that are the ones that are paying. How much focus are you planning to put on trying to monetize the smaller folks?
That might be a little bit of a misperception because there's 100,000 customers. And there's 500 companies in the Fortune 500. So we're talking 99,500 who couldn't possibly be there. There's a lot of small businesses there. So I think what people get hung up on is we talk about 600,000 organizations using Slack and 100,000 paid customers. But among those paid customers are organizations that have hundreds of thousands of people, tens of thousands of people. And among the people using it for free are people working on home renovation projects or planning weddings or organizing their kids' soccer league who we don't expect to pay, but who are a great spread for us. And that's how Slack gets introduced into new companies and people become familiar with it.
Hey, Stewart, it's fun being a public company, right?
Yeah,
watching,
this is exciting.
Kind of watching what happens.
Look, I'm on TV. Hi, Mom.
But to be watching swings like this, when my guess is you guys were being pretty upfront and honest as you could be when you were talking about the guidance you were expecting that you gave when you first, before you went public. You miss it just slightly, and the street's like, wow, what happened?
Well, we beat our guidance. We beat the consensus estimate, and we raised for the year. So I think there are nested expectations that go up.
And that's the crazy thing about Wall Street, right? Trying to figure out how to help analysts get some of this guidance. I think it's a crazy game. A lot of companies just get into this habit of kind of spoon feeding the analysts and telling them these things so they don't wind up with big swings like this. But what's it like trying to absorb all this for the first time as a public company and realize there are crazy swings based on very small revenue or earnings shifts that you get punished so greatly when you're doing your best to just kind of be upfront and honest about where you see things.
Yeah, it's an interesting debate that we even had before. Like how much where do we want to guide to? How close is that to what we really think is going to happen? When you're growing at the rate that we are, adjusted for some of the one-time stuff, 66% year on year, that's a hard thing to model. There's a lot of one big deal can make a big difference for us. One postponement of something can make a big difference. So we try to be, as you said, as upfront as possible and not get into a dynamic where people have an expectation that whatever we say is really going to be 8% or 10% higher. We're constantly beating and raising.